Think you need $40,000 or $50,000 saved up to buy a home in Riverside or San Bernardino County? You don't. The single biggest reason people delay buying a home in the Inland Empire isn't their credit score, their income, or their job. It's the myth that you need massive liquid cash sitting in a bank account just to hand over at escrow. And that single misconception keeps thousands of solid qualified buyers stuck paying their landlord's mortgage month after month. To buy a home in the Inland Empire using California Down Payment Assistance in 2026, buyers can utilize state-backed programs like CalHFA MyHome Assistance or Zero Down FHA grant combinations. These programs offer up to 3.5 to 5% of the purchase price in subordinate loans or forgivable grants to cover down payments and closing costs. Qualification requires a minimum credit score, it's typically 660, and household income below local county caps, which currently sit at $210,000 across both Riverside and San Bernardino counties. And let's cut through the fine print and look at how these state programs function on the ground across Riverside and San Bernardino counties. CalHFA offers two primary routes for SoCal buyers: the CalHFA MyHome Assistance Program and specialized forgivable equity builder funds when state allocations are open. MyHome functions as a silent second mortgage. It covers up to 3.5% of your home's purchase price on an FHA loan or 3% on a conventional loan. And you don't have to make monthly payments on that second loan. Instead, it sits quietly in the background and gets repaid whenever you sell, refinance, or pay off your primary mortgage. If you purchase a $550,000 single-family home in Moreno Valley, Fontana, or Riverside, that's roughly $19,250. You don't have to drain from your personal savings account. Keep in mind that state programs impose strict household income caps based on the county where the home sits. Fortunately, Riverside and San Bernardino counties share generous CalHFA income limits, giving buyers substantial leeway even with two working adults in the household. So what's the trade-off? Interest rates on first mortgages paired with state assistance typically run slightly higher than standard market rates, usually by 1/4 to 0.5%. You are essentially trading a slightly higher monthly payment to keep your liquid cash completely intact for emergency reserves, furniture, or immediate home improvements. Here's the secret sauce we execute every day at National Realty Group and National One Mortgage. Down payment assistance covers the required down payment. But what about escrow fees, title insurance, home inspections, and lender fees? This is where seller concessions come into play. In today's balanced Inland Empire market, sellers are negotiating again. We frequently structure offers where the state program handles your 3.5% down payment, and we negotiate a 2% seller credit to cover your closing costs. And suddenly, you walk into escrow right here on Indiana Avenue in Riverside, sign your paperwork, and write a check for essentially $0 out of pocket. It happens all the time when your real estate broker and mortgage lender operate under one roof. If you want to see exactly how much down payment assistance you qualify for based on your income, credit score, and target city in the Inland Empire, don't guess. Give us a call at National Realty Group at 951-684-2600 or visit nationalrealtygroup.com. We'll run down your exact numbers, compare CalHFA against standard FHA and VA options, and show you what your true monthly payment looks like before you start visiting open houses. And drop your questions in the comments below, hit subscribe, and let's get you into that home. Thanks for watching. We'll see you next week.